No, go. Sir, come here.
I'm busy right now, Abhishek.
No, come here.
Abhishek!
Sir, the world is conspiring against me.
What happened?
These people are behind my money. They are behind my stocks.
Dude, which people, man?
I took this trade, I put my stop loss, then these guys pushed the market down, I lost my money, and then these guys made the market go up.
Wait.
They made the money.
Hold on. Stop loss hunting. Has it ever happened? You place a stop loss, it gets hit and market reverses. Or you want to buy a company and then the market goes up. Doesn't it seem like everyone's conspiring against you? And they probably are, but there's a simple solution we'll solve for Abhishek and for you. Let's get started. So the solution is very simple.
Sir, I'll give you the solution.
Okay.
Mental stop loss.
You are the mental boy now, bro.
No, understand this. Wait. Now, if I don't tell these guys where my stop loss is, they won't come to know.
Okay.
And I'll be rich.
Dude, so tell me, what would you have done during COVID? Remember COVID?
Huh?
The world was falling apart. You could not leave. There was a lockdown. We didn't have a vaccine. The market was crashing, if you can see. If you had a mental stop loss here and the market fell here, when you're trading, isn't that really risky? What would you do? Let's suppose you were trading a futures position.
Okay.
Or let's suppose you had sold options. Or let's suppose you had done an intraday trade with a lot of leverage. Now, if this event had happened, what would you do with your mental stop loss? Like COVID. What would you do with your mental stop loss? You would have lost a large portion of your capital, right? You would have lost a large portion of your capital, right? This is called a black swan event. And black swan events happen actually pretty often if you look at a 10-year timeline. So imagine you trade for a long time and one trade you ruin everything.
But that's very rare, no, these events. I can make money in...
But why do you want to lose money in one single event? Are you comfortable doing that? Losing all of your capital because you don't actually have a stop loss in place? And there's another thing. Most traders actually have a mental stop loss. So good job. But actually bad job. Because people wait for the market to come near the stop loss and then they modify the order and then they cancel the orders and then they say baad mein dekhte hain. I think the market will reverse and the market keeps going down. So many traders don't really have a stop loss in place. But it's just a mental stop loss.
But in that case, I have to watch the screen, na?
If your stop loss in place, you don't have to do anything. You just leave it. If it gets hit, you're out. So having a stop loss is good.
Okay.
Also, how productive do you think you've been in office? I was looking at your reports. Your KRAs are not met, you're coming late.
सब कुछ किया है.
You know why?
Why?
Because you're looking at the screen all day. Because you don't have a stop loss in place. Can you really sit in front of the screen all day?
No.
What I'll have to do for his productivity? See, for a stop loss, once you have it, you can stay away from the screen. But with the mental stop loss, you'll be glued to it. Market kahan gaya? Should I place? Should I exit? What should I do?
But sir, what should I do? How can I avoid these hunters? They're hunting my stop loss.
Who are these people, dude? There is no one after you. You know, a lot of people think like you. They think I'll place a mental stop loss. And I'm talking about retail traders here. I'll place a mental stop loss when markets come closer. Then I'll get scared. Then I'll modify. I'll cancel. I'll edit. I'll make the stop loss lower. And basically, no one really has a stop loss. So there is no day to hunt your stop loss because most retail traders don't actually place a stop loss.
No sir, I don't agree. These people are hunting my money.
Look, there's no them and there's no you. The market is many people. But let me try to explain. Maybe you don't understand three concepts. And they're all under something called freak trades.
Freak trades?
Okay, let me explain what it is. A freak trade is when the market goes up and down really fast and you couldn't predict it. That's why it's called a freak trade.
Okay.
And the production team had less work, so we asked them to do this. This was not planned at all.
Sir, freak trade.
Let's start with liquidity, okay? So let's suppose these are the shares. Wait. This is the shares. Forget about the color. These are the shares of a certain company, okay? Now I want you to take this.
Okay.
This is one, okay? 50 ka note, 50 ka coin. Let's imagine these are many shares. I want you to throw this in. Perfect. Can you tell me where your coin, your share has gone?
Sir, what kya?
This is not a
How would
magic
I
trick.
know?
The point is, if there are many shares and you put in one share, the liquidity is so much, you cannot affect the market. Do you think that one coin affected with a market of say 50 crore shares?
That's like a big company.
That's like a big company. It's like a Reliance or an HDFC bank. You can't move the market. But let's suppose this is a company. Hypothetically, it has only one share. It may have more, but let's say it's one share. And you have one share. And you do a buy or sell. Can you throw it in?
It's movable.
Can you tell me which one?
Yeah, this
That's
one.
it. Yep. You affected this small company because the liquidity is less. This is the basic funda. A small company can be manipulated and a large company
Is not affected.
very tough with buy and sell. Very tough. So a small company can have a freak trade.
But okay, okay. But why are you telling me this? Matlab, how is that related to my problem?
I looked at the chart you were showing me just there.
Yeah.
And it seems like the volume is so low that anyone can actually push the market a lot. Not on purpose, but it can happen. And because of that, you're seeing erratic movements of up and down and your stop loss gets hit. So maybe you should stay away from like low liquid stocks.
Oh.
The second thing of freak trades is news.
News?
Yeah, like
Rumors?
not rumors.
Oh, general news about the company.
It's just general stuff, right? So
play
let's suppose, no, you won't play Jenga.
Acha.
But let's think about an industry, okay? So we have the telecommunication industry. India is a land of billions of people. Many people want to communicate. They will pay for this service. They will pay for Hello Tunes and other value-added services. People want the internet as well. People also want apps connected to the internet which they use. It's a huge market. And a lot of people are making money from telecommunications. Then one business comes and says, I will make telecom free. So this one person comes and makes this one change, makes the tariff free, and it changes the entire industry. Now, could you have predicted this?
No, because, okay,
Could
it's his plan.
And could have anyone predicted this?
I don't think so, except for him.
Think about old companies like, say, Nokia or Xerox or companies you don't, Kodak. You don't hear about these companies anymore.
Kodak camera.
Because the business changed. So if you don't have control over that, when those events happen, a freak trade or a really quick move can happen in the short term.
Right.
And it'll affect a
Stop.
trader.
Trader.
So there's no them. It's just market forces. And the third reason for a freak trade is a fat finger error.
Fat what?
Fat finger error. Wait, let me explain. So imagine you're a trader working in this really large company and you have to place an order.
Yeah.
A quantity order. We have 3 decimal places here. Start writing here. Put in 10,000 quantity. Your time is over now.
Ow!
I said 10,000. You put in 1 lakh.
Because you didn't give me
Paisa
time.
barbaad. This is called a fat finger error. People type an extra zero. So 2,500 may become 25,000. And because of this, the market actually moves. Now, luckily, India has safeguards against such a thing. In 2021, we had a rule that come out that prevents a certain quantity from being accepted by the exchange. It's called a quantity freeze. And if the exchange receives a large order of a certain kind, right over here, it basically rejects and cancels that order. Taki aisi cheez ho na.
So, okay, I understood free trades, but no one's after me.
So, no girls, no shadowy people, no liquidity issues, no one's coming out for you. No one's after you. Time ki baat hai. And speaking of time, there is something called time frame analysis.
Who does butter?
But I need a chart.
Chart.
Halo.
Le liya.
This is called the time frame effect. I want you to look at
Red Kanjul.
this chart. Isn't that a crazy fall?
Huh.
Look at this, normal markets. There's a gap up, huge
Money.
fall. But do you think this is a huge freak trade?
Oh, that's a very huge free trade.
That's a huge freak trade, right? I
Yeah.
want you to notice that this is a 5-minute chart.
Okay.
Matlab, this candle is how many minutes?
5 minutes.
Correct. Now, look at this, the same day, 28th.
It's a green candle. Okay.
This is the same day that you just saw. So look at this, boom, oh my God, market's gonna fall, selling. But actually, this is where the
was a
market
good
is
day.
at. It was a normal day, right? In a smaller time frame, it may seem like something crazy is happening. It may seem like the market is moving freakishly, like a freak trade. But if you zoom out or go to a higher time frame, like a daily, you'll see everything's fine, it's normal. But if you go to a weekly chart, it'll be even smoother. If you go to monthly, it'll be even smoother.
But I don't trade on monthly chart, na?
So when you're looking at a really low time frame, don't think every candle is a freak trade.
Okay.
Cool. But dude, why do you always show me your loss trades? Like, what about your profit trades?
Oh, so you check this trade.
That's a good profit.
Of course, you see the support line, right?
Yeah.
I put up some Fibonacci, Bollinger bands, and it was indicating me to buy the stock, and I bought the stock, and I made money.
You're a good trader.
Of course I am.
Come here.
Where?
Come here.
Okay.
You know, this is actually an interesting human bias. So when you're actually making money, you feel, I've done an amazing analysis. I did X, Y, Z, and of course I made some money. But when you lose, then you go into sir. And this bias actually means that you feel you cannot do anything wrong when things go right. So this bias means that when things go right, you don't find a reason of why they went right. It was you. You are the best person, you are great at this, and you're a good trader.
Of course.
But when things go wrong, they may be shadowy people sitting in a smoke-filled room, sabotaging your trades. The economy moved and you had bad luck. The news just came out at the wrong time. The company changed its business plan, etc., etc., etc. The truth is, all that is not in your control. The only thing really in your control is the stop loss. You can actually place the stop loss, measure your risk, do this over a really long period of time,
Make money.
and you would be fine. Now you tell me in the comments, when was the last time you blamed some crazy thing on a bad trade you did? Tell me the details on what stock it was, how you felt, and maybe that reasoning is absurd. Abhishek will feel better.
You know what will make me feel better? When these guys, you will subscribe to this channel. Subscribe now. बड़ी नहीं रहे सब्सक्राइबर किया रे कैसे मीट होगा? Bye. Come to know where is the price. Sorry, where is the stop loss?
क्या तूने?
BTS.
BTS क्यों बोला तूने? क्या
Sir, RGB. Nobody is after me.
Fibonacci, money in the bank, kaching. And when things do go wrong, and when बोल ना, कैमरा को बोल. GPT है तू? nah.